come across some clients who work as 1099 independent contractors rather than W-2 employees. And as we all already know, there are a lot of advantages to being an independent contractor, the primary one being that you have more independence and flexibility. However, there are also some key planning considerations that you should really keep in mind as you try to manage your finances. And so today, what we're going to do is just share a few tips and ideas for getting you started. Planning issue number one is around saving towards your financial goals. So the challenge here, right, is having inconsistent or varying income makes it difficult sometimes to set up automatic savings towards your accounts. So you can effectively save towards your goals over time in a set it and forget it manner. The solution here is to start first by quantifying your financial goals. For example, I want to save $10,000 per year to my child's 529 plan. Once you've quantified your financial goals, then make some conservative estimates around what you think your lowest possible monthly income will be, and then set up some small automatic savings that feel more manageable and reasonable on a reoccurring basis. So an example here might be setting up automatic deposits of a few $100s to your child's 529 plan each month. Another option you have is to commit a percentage of each commission check to some of your goals until it's fully funded. So if you want to use the same example, you might commit 10% of each commission check until you've saved the full $10,000 to your child's 529 plan. Planning issue number two is around maximizing your retirement savings. So the challenge here is that without an employer-sponsored retirement plan, you can feel sometimes like you're limited as to how much you can save for retirement. There's no eligible employer match, right? There's no automatic system where you can just go in and defer a percentage of your paycheck each payroll. And the max contribution you can make to a Roth IRA or an IRA in 2019 is $6,000 if you're under the age of 50 or $7,000 if you're over the age of 50. The solution here is to set up a SEP IRA or solo 401k to greatly increase your capacity to save for retirement. The max contribution you can make to a SEP IRA in 2019 is either 25% of your net income or $56,000, whichever is less. Then the max contribution for a solo 401k in 2019 is $56,000, $19,000 of which is going to be considered your employee contribution, and the other $37,000 is going to be considered your employer contribution. Planning issue number three is around managing your tax liability. So the challenge here, right, is you can end up with a surprise and not a very fun one every tax season, just due to the inability to really project out what your income is going to be each year. The solution here is to really work closely with your accountant and consider making quarterly estimated tax payments each year. Also, if you haven't already considered, maybe set up a separate checking account and credit card for the business-related expenses, so it's a little bit easier to track it each year come tax season. Finally, you can also contribute to an IRA, a SEP IRA, or a solo 401k to help shelter taxable income. We hope you enjoyed today's video. For more iThrive ideas like these, please subscribe to our blog at www.thrivewealth.com.